Good morning or good afternoon, everyone. I wanted to welcome you. My name is Bob Blake with Xanogy, and thank you for attending today. Today we're our nonprofit executive series webinar. We're going to talk about budgeting. So we're going to have a discussion about how savvy nonprofit organizations can embrace smart budgeting. And we'll have two separate presenters today. We'll have Michael Rybacki with Centage and Matt Harshfield with Company Mileage that will assist in those. Our webinars are for you guys to understand some best practices for nonprofit professionals. So in the past, we've done some on employee time and expense and that along with budgeting. Those are the favorite things that everybody loves to do and is record time and to do budget. So we hope that you find this useful and you'll be able to have take away some key points about making your budget process quicker. So I'm going to turn it over to the folks at Centage now.
All right, great. Well, thank you very much. Appreciate the opportunity. We are going to take over the presentation controls in a second. I just want to make sure that everybody can see our screen, so give us half a second to fire that up. And can you hear us okay, Bob?
I can hear you fine. I can see your screen fine. I'm going to turn it over to you, and I will mute myself and others as they come in.
All right, we're on fire then. We figured out the screen sharing technology. So this is Michael Rybacki. It's a pleasure to meet everybody today. Bob, thank you for the opportunity. I am joined by the actual talent of the graphics of this presentation and pretty much all the pretty things that you would ever see from our company, named Nikki Richard. And I am also joined by the lovely and talented Diego Castro, who's going to start things off here in a second. And I know he's got his own little proper intro slide with an agenda. So Diego, go ahead.
Thank you, Mike. You're making me blush. I appreciate it. Bob, thank you for putting this together and allowing us to present, our findings in this industry. We're very excited as partners with Xanogy, and again, thank you. So today, I just wanted to briefly review our agenda. As Mike had mentioned, my name is Diego Castro. I work in the channel role at Centage, and a couple things we're going to be covering today, myself and Mike. We're going to talk a little bit about just essentially a brief discussion on the needs of the nonprofit industry and kind of what we see on our end. We're going to talk about spreadsheets, which is always fun, right? And why we want to ditch those spreadsheets to make things a little bit more efficient. We're going to talk a little bit about smart budgeting and what that means to us here at Centage. And lastly, we're going to talk about the benefits of smart budgeting and whether it's something that makes sense to look into. So we're going to talk a little bit about today's nonprofits and kind of the challenges that you folks run into on a day-to-day basis. So if you're like most nonprofit organizations, you don't have a huge FP&A team, but you're still, asked to deliver quite a bit of information. You need to pull together the budgets and plans from all the different teams and create one consolidated and accurate budget. If that were the only thing, it would be hard enough as it is. So you need to know how your business is performing, and not just today. Ideally, you want to predict how the financials look for next month, 6 months, and now 2 years from now. You need to report that to the executive team and the board. They want to know this quarter's results, right? They're going to want to know it at several times throughout the year. They want to understand anything that puts the plan into risk. And you need to use all of that to propose changes to the plan, which might mean reforecasting or adjusting your goals as you go. And of course, you're expected to do all of this for that 2 o'clock meeting you just found out about. As one CFO told us, finance leaders need to be part accountant, part strategist, and part clairvoyant. It's a very challenging environment, and we recognize that. And the problem, as you already know, is that legacy tools aren't going to they're just not going to do it anymore, and that's why we need to be able to pivot and be able to make changes on the fly. So financial strength is key. So our good friend Bob Mims, for not-for-profits, there can be no mission delivery without financial strength. So nonprofit executives are passionate about the mission, right? The goal is to run an efficient operation that lets you do more, provide more scholarships, treat more patients, advocate for more constituents, whatever it is you do. You need money to do that, and you need the financial strength of the organization to deliver on that mission. Nonprofits also need to think about cash. An organization is sustainable in the long term, but unsustainable in the short term will be chronically short of cash. So conversely, an organization sustainable in the short term but not in the long term may have inadequate cash, but inflation will cause the value of its assets to erode over time. This in turn will cause the quantity and quality of the service to diminish unless capital campaigns periodically bring infusions of new assets. So talking a little bit about freeing yourself from expense. So let's start with some statistics. This is based off of a study from Dr. Raymond Pankow at the University of Hawaii. He's made his life's work out of studying spreadsheets and how organizations currently use them. For example, his peer-reviewed research has found that 94% of Excel-built budgets contain statistically significant errors. So I'm going to repeat that. 94% of Excel-built budgets contained statistically significant errors. Obviously, that's a staggering statistic, and a lot of the issues that come along with this are actually pretty dumb, as we'll talk about, just slight errors that lead to larger areas. So here are two case studies that we found with Excel failures. First one, University of Toledo. I believe this one was several years back, but essentially officials have discovered an internal budgeting error that means that they will have $2.4 million less to work with than anticipated. The mistake was a typo in the formula that led officials to overestimate projected revenue. Was found Tuesday, while official UT projections call for a 10% decline in graduate student enrollment. An increase mistakenly was shown in a spreadsheet formula that led officials to overestimate enrollment and therefore revenue. So small mistake led to big consequences. On the right, this one I believe was not too long ago with Virginia Tech. Some of you might remember. The Center for Regional Strategies recently confirmed that a researcher's errant cut and paste from a spreadsheet caused one measure of the region's level of educational attainment to appear a lot worse than it is. Specifically, in a study released in March by the Center of Regional Strategies, a self-described think and do tank housed at Virginia Tech, the center reported that a dismissal 11% of the region's population older than 25 had bachelor's degrees or higher. That number should have been 20%.
And just as an interjection here, these are smart people making dumb mistakes because of the tools that they're using, right? So we purposefully chose people at two highly respected universities that are professionals, that are good at their jobs, that made a simple human error because of the tool that they're using. It's not, you know, because they don't know how to do their job or because they were careless. In the instance on the left, it's what we're talking about most of the day here today, budgeting, forecasting, reporting. But we wanted to throw a case study over there on the right about the mission itself. So in this case, on the Virginia Tech, it was actually on the mission delivery side. They're not using spreadsheets in that case just for budgeting and forecasting. They were using spreadsheets to tabulate data that was going into a publication that they were doing. And so they published statistics that the state uses in Virginia to assign different benefits, you know, for different populations at risk and things like that. And that could have really dire policy consequences if policymakers are working with the wrong information, and that wrong information, the information was collected properly, the information was studied properly and vetted properly, and then it goes into a spreadsheet and somebody just fat fingers a little typo, and all of a sudden that could have really dire policy consequences for the state. Luckily, they found out and were able to correct it. But whether we're talking about the finances, which is what Diego and myself are focused on today, that's the example like Toledo, or whether it's just talking about the mission that you guys have at stake, whether it's again, healthcare, education, advocacy of some kind, the mission can also be compromised by spreadsheets and their failings. And that's something for you guys to think about. I'm not an enemy of spreadsheets. Diego isn't. Our company isn't an enemy of spreadsheets. We use them all the time, every day. We got to think about what we're using them for and what the limitations of that particular vehicle are going to be and what are the potential consequences. And then find out if there are better ways to handle that. And in many instances, there are better tools, better systems, and better things you can do internally to control for these types of factors and errors that have real-world consequences.
All right, so let's switch gears here, and we're going to talk a little bit about typical changes and pains that we encounter with spreadsheets. This is information based on just conversations that we've had with people in the industry and just what we find and run into on a day-to-day basis. So, just to piggyback off of Mike, it's not just the formula errors that plague spreadsheets. It's going back to the topic of, just using Excel for financial operations. This is what we hear a lot from nonprofits that are still using Excel. They struggle with consolidations, with allocating spend to grants, or allocating employees to programs. They have trouble earmarking restricted versus unrestricted funds, putting together a cash flow projection, and managing input from multiple budget stakeholders. So let's talk a little bit about the process and how we can be a little bit more efficient. So as of now, data is siloed. This is what we see with a lot of the companies that come to us. So drilling down to that last point, the idea of working with data from multiple budget stakeholders. In most organizations, the data you need and the people who need it sit in silos. So the data is spread around and fragmented. This makes trying to do anything with spreadsheets very difficult. With all the links and the complex formulas, it's just too easy for errors and inconsistencies to creep in. A lot of work, it's risky, and it often means leaning heavily on your IT team and going back to other teams to manually connect everything and double check it. And that's just the beginning of, that's just building the budget rather. When you start to make changes such as adding new accounts or new budgets, it gets really ugly. So let's be clear what we mean by changes. Updating the numbers is easy enough in any budget. Modifying the structure of the model is not. Try adding accounts, accommodating your program, or launching a new fundraising campaign. Any of those can be a recipe for disaster as far as your budget is concerned. So the net of all of this is that it's really hard to produce data you can rely on to make well-informed decisions.
Yeah, and then thanks, Diego. That really is the point, right? So what is the point of putting together a budget, a forecast, or a report anyway? It's to make organizational decisions. When should we hire people? When should we take on that new capital project? What kind of fundraising do we need to do to support this new program or mission that we have? And that decision-making process is better served when it's data-driven, and when it's data-driven, you got to be able to count on that data and rely on it, and hopefully not expend all your time and energy arriving, at a conclusion that's driven off of wrong data or incomplete data. So let's talk about smart budgeting. It's an approach that we have found as kind of a best practice in the marketplace, and there's no particular tool or system that you need to do it. I will admit, our company, Centage Corporation, this is what we're in business to do, is help organizations with this. But you don't need our product necessarily to get to these different conclusions. This is what we found has helped folks get a better handle of their budgeting and forecasting process. Right. Number one, they need a budget that stays in sync with the chart of accounts. Right. If the chart of accounts is the system of record for all financial transactions at the company, then the budget should mirror the chart of accounts such that when new accounts are added, that's an important thing. That means there's a business activity going on. Is it a new expense? Is it a new hire? What is it? A new capital project or something? That needs to be accounted for on the budget side, one for one, right? it stays in sync with your actuals. So as those new actuals roll in, it should be something you can compare the budget to. Otherwise, you're just left with, here's what we thought we were going to do at the beginning of the year, here's what's happened. The key is to figure out, okay, well, where does that leave us? Where's the delta, right? Number 3, it programs itself with financial logic. Excel-based budgeting and forecasting can be very, very cumbersome, and you have to build all these different manual formulas and lookups and macros and processes around calculating and tabulating and consolidating that data. There are things you can do, no matter what tools and systems you use, to shortcut some of those issues, right? Number 4, maintains financial integrity through changes. This is really important. This is what we're talking about when you do driver-based planning. So, you know, think about your organization, and we're going to touch upon drivers again in a few slides. Your budget process, you know, we're a software company. So for us, the number of different customers that we have, the number of accounts, that's the key driver. We know that if we have 100 new customers, we need X amount of service people to be able to deliver services to them, right? So for you, it might be the number of people that are in this after-school program, this is how many teachers and supervisors we'll need. Or if it's the number of patients at this clinic, this is how many doctors and support staff we're going to need. Those aren't necessarily financial numbers, the number of patients, the number of students, or in our case, the number of software, you know, the number of companies that use our software. But that number is really key to the budget and forecast process because it's driving a bunch of financial assumptions behind it, right? So number 4 on our pillar there, we want to maintain financial integrity through changes to that data, whether it's financial data or it's the underlying assumptions that might not be financial. Again, we'll come back to that concept of drivers in a minute because it's really important. Number 5 involves every budget owner. So you've got budget stakeholders, either program directors, you've probably got an executive director or board, program directors, maybe there's, you know, managers of different departments, and they've all got some stakeholders, they're all stakeholders in the process in some way. Either it's just expenses or they have people working for them and so they've got to allocate hours or new hires and things like that. Maybe they're involved with one of your capital projects. Maybe it's on the income side and they're working on fundraising projects. But most nonprofit organizations have a decentralized budget in terms of budget stakeholder input. The finance team is usually not just making the budget up in a room by themselves. They're going out and getting input from people on the ground and saying, you know, what are the services that people are consuming at what given rates? What do we need in order to support that? So getting that stakeholder input in an easy way is important. Number 6, make reforecasting easy. Everybody who's ever put a budget together knows that as soon as the printer spits it out, it's useless. We're all, you know, trying our best to make it as viable and as useful as we can, but things change, right? So the number of people you thought were going to be in this program went up by 10% unexpectedly. What is that going to do? You can't stick with the original plan and just hope to make it work. So reforecasting should be, a primary activity, not something that's a pipe dream. And there are different processes you can put in place to make that easier. Number 7, the ability to track performance against plan. How are we doing versus what we expected? What does that mean for what we need to change or do moving forward? Number 8, reporting and analytics accessible to everyone. This can't be something where all the information is stuck in one small room, right? The people on the ground, yes, they may not know how to read every detail of a certain report. There are reports here at my company that if you put them on my desk, they'd look like they were written in German to me. I wouldn't get it, right? But there's also data that is really important to how I do my job, and I could do my job better if I had that information in a clean, timely, accessible way, right? So the key process here is understanding who needs what information, how do we get that information to them as quickly and efficiently as possible, what of that process can we automate so that way they have access to the information they need, and frankly also only the information they need. If they're not supposed to have access to certain information because it's not important to their function, then we can restrict that as well. And lastly, auto-generating balance sheet and cash flow projections. A lot of times people say, well, I don't care about that. It's a nonprofit. You know, it's not important. Diego read you that quote earlier on about cash being king, and I think that's really true. Even in the nonprofit space, if you may be flush with cash today because you ran some campaign, or you've got some gift or some grants or whatever it may be, but the timing of that spend can really affect how efficiently you deliver your services later on, right? So that's what cash is about. It's about timing, right? Because you guys, can I'm sure do a good job fundraising and staying on top of things. You can go out there and get the money that you need to, God willing, I hope you can, for the projects that are important to you. But you don't want to ever find yourself in a situation where you can't deliver on a service or can't meet the needs of a certain population because of a planning error. If it's just because you can't find the dough, or people aren't being generous with their time, or whatever it is, that's one thing. But if it's a planning error, that's hard to live with. And so cash is really important when it comes to timing. All right? So we're going to drill into some of these one-on-one. The first is, what do I mean by having a budget that stays in sync with your accounts? What I mean is, it connects to your general ledger. So whatever system you're using for your general ledger, and we have some examples up there on the screen, it could be anything that you guys have, right? But your budget should be connected to that automatically. It shouldn't be something where you have to download it and then reformat it and upload it, or it shouldn't be something where you're going to forget some account or account string or group of accounts. It should automatically stay in sync one for one. When a new account's added on the general ledger side, it pops up and is made available to the budgeters. They see it there. They see what has been spent, or what income, if it's an income account, has come in, so that way they can project it moving forward. It should have simple tools for financial users to build around the dimensional budget model. So you've got hierarchies, segmentation in your general ledger. Maybe you certainly got an account code, maybe a location, a department. A lot of times we see project, campaign, that kind of thing. If you put the time and effort to put that in your general ledger, you want those things to flow right through to the budget. And also, when you add a new project, campaign, that type of attribute, you want those to flow through too. So that way, everything is seamlessly lined up one for one. And you want there ideally to be some built-in logic to transform those accounting strings into meaningful business terms. What do I mean by that? Let's say your system spits out an account string alphanumerically, and it's 4 digits for location and 3 digits for core account and whatever else. It doesn't mean a hell of a lot to the end user. You guys might get it, being in the finance team, but if you're going to show it on a report and it's just an account string, it's gibberish, right? So being able to group those account strings by some type of logic and easily slice and dice it, so that way if you want to on the fly say, what did what did we spend for this project on fundraising costs in Q2 of last year? That becomes an English language question, as opposed to trying to decipher, what the account strings and segments need to be, right? So there are tools and things you can do to make it easier to slice and dice that information without knowing the underlying account string architecture, right? All right, 2, stay in sync with your actuals. So we should, we talked about it being able to pick up on new accounts and things like that, but also I want the new data to come in as dollars are spent, as revenue or income is brought in, whether it's a grant or contribution or whatever. You want to be able to see that and monitor budget versus actuals in real time all year long. You're also going to want something ideally that facilitates transaction level detail, so you can drill down and get the understanding of why. So I got this P&L report or balance sheet or whatever it is, and it's telling me we spent more on this particular project through February than we thought we were going to. Why? And be able to drill into those individual invoices you paid or whatever it might be, right? The number of hours somebody worked, and figure out if maybe that was what was out of whack and that's the underlying cause, right? We want to facilitate the why. Programs itself with financial logic. Pre-programmed budget rules and financial logic for rapid interpretation of multiple budgets and budget segments. Easily build and shape an accurate and dependable budget model. No programming, formulas, links, that type of thing. GAAP, IFRS compliance, calculating all the debits and credits associated with transactions. Basically, Microsoft Excel is a tool that's built to do anything. I use it for address labels for all my Christmas cards this year. I used it for keeping track of some fantasy football thing I was doing this week that I was trying to beat Diego in. And we do use it for some work-related activities too. I'm not, completely against Excel, but it doesn't have any of this logic built in. That's actually part of the beauty of Excel, is that it can do everything. but it's not going to enforce GAAP rules, right? That's not built into the tool. It's not going to know to treat an asset like an asset and a liability like a liability for a balance sheet, right? The most you can do is program rules yourself saying, hey, grab these particular cells and roll them up. But there's no logic around what it doesn't know what those group of cells are, right? And that's the difference between a logic-driven solution and, Microsoft Excel when it comes to budgeting and forecasting. Maintain financial integrity through changes. Built-in business rules handle those changes as easily as updating the numbers. So no reprogramming, create unlimited different versions of the budget, immediately see the impact of a P&L level decision on balance sheet and cash flow. Basically what this is saying is everything should be tied together. And, an example I think is the third bullet. When you've got an Excel-based budget and you're just trying to create all right, well, what if we didn't start that project until September instead of May? What if we pushed it back a few months? And you want to spin the budget that way. You got to update a lot of formulas. You got to make sure that all the right formulas are updating and that you haven't left anything behind. And in the case studies Diego showed you earlier, some smart people can make some mistakes doing that, right? That's what we're talking about with maintaining financial integrity through the changes. There are systems that are available out there on the market, and there are also just things you can put in place and even a spreadsheet-driven process that prevent you from making those types of mistakes, that tie those assumptions to a given time frame such that you move up, somebody's higher, their expenses roll along with them, and every formula they're tied to rolls along with it. You move back that project a little bit, everything that's associated with that project from personnel costs to recognizing the spend to a grant or whatever else, all of that is going to roll backwards automatically, and you're not going to have to manually chase through those changes. It involves every budget owner. So finance managers work on their own, role-based view of the budget. Everything rolls up to a consolidated model that can be iterated indefinitely, and the budget remains accurate and up to date. This is about getting those contributions from stakeholders in a clean way. We all know about the track changes type version in Excel. What happens a lot is Nikki works on her version of the spreadsheet, then it goes out, Diego's working on his version, then I've got a version, and somebody's got to either manually consolidate it all together, or worst case, they kind of missed one of those versions because they just made the assumption that Nikki did hers after mine, she must have updated mine. No, she was working off the original, that type of thing. So managing budget contributor input and having some type of role-based hierarchy or architecture to it so you know who's done what and what they're responsible for and how it works. Sixth pillar of smart budgeting, making reforecasting easy. Built-in logic means reforecasting to the account for missed assumptions like, our enrollment was supposed to be off on that example where they missed the enrollment by 10%, right? That should never happen in a tool that or a process that employs smart budgeting, because drivers would be tied to those, universal drivers would be tied to all those underlying assumptions. As soon as enrollment went up by 10% or down 10%, every single calculation that's tied to that driver would be updated in real time. Automatically adjust projected revenues, expenses, and anticipated bottom line based on the incoming actuals. And reforecasting becomes a natural extension of the budget, not something that's kind of a pipe dream or a once-a-year budget, and then we just kind of, pray that it sticks for long enough. So let's talk about that last point a little bit more about, implementing a rolling forecast, and this is kind of our last full section here today. Why rolling forecasts? Steve Player, who runs an organization called Beyond Budgeting Roundtable, so you can Google that and check it out. He says, the fundamental problem I have with budgets is they're all based on assumptions that turn out to be wrong. Sometimes the economy comes in stronger, sometimes it comes in weaker. The budget locks everyone into an annual cycle, but we need to be moving faster than that. We need to be more agile. And that's what we hear from a lot of our nonprofit customers, especially given the political climate over the last several years. If any of you are tied to governmental grants, some senator, some representative somewhere, or even the president tweets something, and all of a sudden, the projected income that you're going to get might change, right? So you need to be able to adjust on the fly for that. Luckily, the economy has been doing okay in many parts of the country. Hopefully that means people are being generous with their time and their dollars. But if that happens to change, how's that going to affect your fundraising ability, right? It never works out exactly the way we want to, and how do we deal with that? The best way to deal with that is a rolling forecast. So that leads us to pillar number 7, 8, and 9 of a smart budget. It allows you to track performance against plan, which you can then use to reforecast. So take the guesswork out of crucial decisions, focus on what matters. Hopefully, the smart budget process will facilitate visual dashboards. That way you can see trends as they emerge, kind of spot icebergs and opportunities so you can strike. Unlimited financial and non-financial drivers. Reporting and analytics accessible to everyone, so that data isn't siloed. People can slice and dice the numbers that are appropriate for them to see. They can get access to that information without pinging finance, without pinging IT, and help them make better decisions in real time. You want to empower decision makers to respond on the fly, as opposed to having to work through a extensive process just to figure out, what the basis for their decision might be, right? Auto-generate balance sheet and cash flow. So understand the risks, variances, and opportunities. Initiate faster changes in response to actual and predicted results in terms of when that gift is coming in, when that grant is coming in, that kind of thing, and how you're going to be able to spend it. All right, so if I've convinced you to work on a rolling forecast, how would you guys implement a rolling forecast, no matter what tool you guys use, right? Let's start by, what are your key objectives? So understand the objectives for creating a rolling forecast. What are you hoping it's going to do for you in terms of information? What questions is it going to answer, right? As an example, and this is kind of getting back to that drivers thing, if you had a magic ball and you said I could implement a perfect rolling forecast and the whole organization is going to buy into it and we're going to get nice, clean data, what's the first piece of data that I'm going to want to see on my screen, or that I'm going to know that I'm going to need to collect from everybody in the organization, so that way I can make good organizational decisions? For education, a lot of times it's student enrollment. For YMCA organizations that we work with, things like that, it's enrollment in different programs that they're running, right? There are some membership organizations that we work with, number of members. There are some advocacy groups we work with, it's number of constituents, right? Let's figure out what those high-level inputs are, and then let's start building our process off of that, right? Because if we're not building a rolling forecast to accommodate those main 1, 2, 3, 4 factors, then we're missing the whole point, and we're missing the flexibility that a rolling forecast, we're missing the benefits of a flexible rolling forecast. So if you want to manage, G&A overhead better, maybe you focus on hiring or capacity. Maybe you have a lot of capital assets projects and you start with that piece of it. Again, I can't tell you because I don't know, your particulars of your organization, but the first step in a rolling forecast is thinking about what's the key pieces of information that I would want updated on a regular basis that helps me to make the best decisions for the organization. What's the ideal forecast timeline? So is it every month? Is it every quarter? Are we talking about doing a more than 1-year plan? Do you need a 2-year plan? Is it 12, 15, 18 months? So, think about not just, kind of step 1, what is the key data that we want to see updated? Number 2, what's the time frame for that? Understand the key drivers. I beat this to death. I'm going to do it again because it's one of the most important things. What are the dynamics of income and expense in your organization? Rolling forecasts don't work if you have to do a bottom-up plan like your budget every time. So think about your budget process. It may take you 2 days, 2 weeks, 2 months, whatever it is. It's not sustainable to do that every single month, every single quarter, whatever. It's going to be bottom-up. You need kind of a summary level, and you need to be able to tie a lot of those different expense and income metrics to whatever those key assumptions are that we talked about earlier, like enrollment or number of patients or number of students or whatever it's going to be. As an example, an increase in enrollment could drive expenses, which drives the need for hiring and fundraising. So in this example, the key driver or starting assumption that needs to be updated is projected enrollment, and it's tied to everything else around it. Plan capital and strategic projects separately. This is another mistake we see from folks who try, especially nonprofits. who try and adapt a rolling forecast. They go a little crazy with it. They embrace the concept almost too much, excuse me, and they want to tie not just income and expenses and hiring to the rolling forecast, but they also want to tie their capital and strategic long-term projects. So maybe it's adding a new building, maybe it's adding a new program, whatever it's going to be. That is usually kind of independent of the monthly kind of quarterly number. For example, here at Centage, we're a for-profit business. We sell software, right? If we have a really good month and, you know, Diego sells $1 million of Budget Maestro by himself, right, and the company hits a great number, then it's not really a great idea for us to then just assume that's going to happen in perpetuity and give Nikki a $10 million budget to go out there and market and do whatever trade show she wants and buy tchotchkes for everybody, right? You can't assume a bad month or a bad quarter or a bad fundraising campaign or a good month, a good quarter, or a good fundraising campaign is going to last in perpetuity. So when we talk about a capital project, something that's going to take multiple years, you know, again, building a new building, opening up a new location, a new clinic, whatever it's going to be, a new school at the university, you know, with the School of Agriculture, we're opening up a new one. That should not be tied into that rolling forecast. It should sit independently on the side. Obviously, your cash position will affect your ability to deliver on that project, but you don't want those metrics like enrollment, for example, of a given month or quarter to affect the viability of that project. Something should be assessed separately. And lastly, start small. So while conventional wisdom would be involve as many participants as possible, organizations have found it easier to start small with a group that cuts across major departments and gradually involve more managers as process and methods are refined. So let the small group get some practice with the process. It'll help flush it out, make it, you know, a little bit, get their buy-in, basically. Get people in there who are understanding the process, who can kind of be evangelical about the process, who can answer questions and be champions for the process for other people, and who believe that it works. They've actually seen it in action. They've honed it. They've chipped away at the mistakes. You're not going to get it right 1,000% the first time. There's going to be something that you wish you could tweak or do a little bit differently. Start small. Start with the finance team. Take the stakeholders that you think are most likely to kind of get it or play a significant role in the process. Get them involved, get their feedback, turn them on to the process, get them to be champions, and then push it down to the rest of the group and the rest of the stakeholders. You don't want to bite off too much, you know, more than you can chew. You definitely want to pace this appropriately. And, you know, again, you don't have to be afraid to jump in and try it. I'm encouraging you to do so tomorrow. But I think instead of, you know, unleashing it to every single department and every single department head and stakeholder as a sea change overnight, let's make sure that we've identified all the right reports we need to build, all the right data folks need to see, what are the right drivers for that forecast, how are we going to get those drivers updated, how often are we going to do it, and what are we going to do with that information once we've got it? Are we going to meet monthly, quarterly, semi-annually to review our plan and make any, you know, decisions that we need to make in the organization moving forward? Once you've got that information and you've got a group of key stakeholders lined up as champions for your project, then you can really push it down to everybody else. And I think that's something that we've learned over the last few years. So we open it up now to Q&A. We are excited with the partnership with Xanergy that we've been able to, you know, speak with Bob and the Xanergy team about, you know, the nonprofit space and what he's seen and what you guys might need. But if there's anything that we missed today, anything that you heard in the presentation that you want to know more about, please let us know. We just tried to want to share with you some of what we've learned from our nonprofit customers over the last 16 years, the challenges they face, the limitations of Excel, and what, you know, the best practices of a smart budget process, a process that is designed to eliminate some of those risk factors associated with Excel-based budgeting and facilitate, you know, advanced decision-making, or excuse me, data-driven decisions via tools like a rolling forecast. So, any questions?
anyone has any questions during any time, if you want to chat those over, I can read those and we can get to those at the end of the presentation or as time permits. Thank you guys, Diego and Michael, for doing a great job there. I appreciate it. And I'm going to now make Matt with Company Mileage our presenter. And Matt is going to talk to us about how we can take a look at mileage as a solution to help us save some money and tracking. Forecasting for mileage might be one of those little pieces of your budget that are a little bit complicated for you. So he's going to give you some hints on that. All right, I'm able to see your screen now.
Bob, can you guys see my screen?
We can see your screen now, yep. And
okay,
I can hear you too.
Perfect, thank you. So I'll jump right to it here. And it's very similar to these guys prior, and great presentation, by the way. All it is just, as far as mileage and just like your budgeting and forecasting, it's little errors that happen with the human process. You know, like you said in the spreadsheets and have to reformulate and that kind of thing. As far as mileage is concerned, you know, and by the way, we cater directly to nonprofits, you know, whether it be youth and family services, foster care, behavioral health, mental health. We do a lot of home health and hospice as well, just due to the volume that they travel. But all it is just taking away those little rounding errors that occur on a day-to-day basis. And you can see that with this illustration here. You know, we've done the analytics, we've done the math on it. We've found that even your most honest employee is typically off by 20%. So you have a clinician or a caseworker out in the field, you know, making 4 or 5 trips a day or less, you know, and 8 gets rounded to 10 almost every time. And it just takes a couple of miles here or there to really show the, you know, the difference. And like I said, on the low end, we're showing a 20% savings on, you know, what's a pretty big number to your bottom line. I've got some other data here. I'm going to be a little bit short on time. I've got a hard stop here in 15 minutes, so I just want to point out a couple of things, and I'm going to jump right to our software. We're a month-to-month service, software as a service, so there's no equipment that you need to buy. It's all web-based. There's nothing to install. There's custom reporting. Our background here is payroll and accounting, so we can actually serve up data files at the end of every pay period that you can upload directly to your payroll or accounting software. So that way you don't have your accounting folks, you know, in the back office taking 2-3 days to key all the data in and cost it correctly, whether it goes to, you know, certain funding sources, grants, project codes, and that kind of thing. We do all the work on the setup. You know, that's just some data files that we trade on the front end, employee data, and any addresses that you may have on the front end, whether it be client homes or schools, facilities, hospitals, you know, clinics, anything like that. We facilitate all the training, all the accounting integration. That's on our end. It's a very simple data feed, regardless of the system. And we're also HIPAA compliant. You know, we understand the industry very well. All the data is encrypted. And we do have a service level agreement that does cover that, but all pretty industry standard, because I know we have patient names and client names and that kind of thing would be in the system. So that's just my quick overview. And by the way, if you guys have any questions as we go here, feel free to stop me. I'm going to switch over here, and I'm going to actually log in as an end user, book a couple of trips, show you the way the engine works. Then we'll look at it from the approver side, and I'll show you some of the reporting features. So again, it doesn't matter when or where they decide to log in, because it's all web-based. You know, we're looking at it from the desktop here for the demo, but it does come with an app that's also very popular amongst our clients today. So any device in the field. And so once I log in, I'm going to see my dashboard here. Again, I'm the end user here. I can see the company name here. This would be the employee name. And we can throw your logo up here as well, just so it looks relevant for the employee. They're going to have a list of icons here. The main thing here, 99% of their time is built right here into the new trip tab. And there's a couple of different ways I can put the trips in. This is what it would look like more real time. So actually out in the field, trip by trip, whether it be on a laptop or a smartphone or iPad or, like I said, any device. Does not mean they have to use it that way. In fact, most of our clients tend to use our software after the fact, whether it be at the end of the day, the end of the week, it could be at the office, at home, wherever. And that's done with the input grid here, which I'll show you as well. So real quick, we'll come in here, we'll grab us a date, whatever it is. They're going to have some icons here to choose from. They're going to have a home address. They've got an office, if they're attached to one, an address book, so anything that's been pre-populated or that they've saved at one point in time or another, as well as a really neat Find Places feature that I'll show you as well. But first, I want to show you a neat feature that we built into the software that a lot of you have. Don't know if it's being utilized, but you've got a policy in place somewhere where I could leave from home and maybe I go see a patient or a client, directly to their house or location, wherever they are, and skip the office. I can start typing in Anderson, a client name or even a client number. If you had one, same thing, I click it, get the mileage, the map and directions, and there you go. Now I used Austin just since Xenergy's based down there. I'm not sure who all we've got on the line today, but you've got your map here. You can zoom in and out. You've got your turn-by-turn directions. Maybe it was your first time out there. But also notice it was a 12.2 mile trip overall, but they were only reimbursed 7.2. And what I did there, and this can vary, it's a flip of a switch in our system, but most of our clients do it this way. I deducted their normal office commute because they left directly from home to a client. So it's a good policy. Now you know it's being utilized. It's exactly 7.2 miles, not 9 or 10 or who knows. Once I continue the trip, it'll automatically put the Andersons as my new start location. And I'm running a little slow here. There we go. And from there, we could run to, say, the Patterson location. Same thing, get the mileage, the directions, 26.3 miles, and now that's exactly what they're getting. They're in between homes or facilities or wherever it is that they're going. And again, that doesn't get rounded to 30. You can also put in things like visit types if you wanted. This is all customizable. And I can continue again, and let's say we're going to go to a location that's not in the address book yet. If you know it, great. You can just put in, whatever it is. If you know the address, great. You just plug it in here as well as the zip, and everything will populate down here just like earlier. Or if you don't know the address, you can hit the Find Places button, and I can just type in anything. I'll just say Walgreens. And that's going to use the mobile device, their GPS feature on their phone, not to track the mileage, but to get that location. So if they didn't know it's 5201 Beltline Road, Dallas, Texas, 75254, they can just use that feature, plug it in, get the mileage and the directions. Now, obviously, don't worry about that number. That'd be a pretty long little trip up here to Dallas, but you get the point here. You can also add those addresses on the fly. So if you need to save that to your address book, you just check this in here or not. And I continue again. We'll do one more here real quick. Maybe I go to the Lincolns, and there's some other features here that you can choose to use or not. Again, this is not the best example because you're probably not traveling from Dallas to Austin and back, but I can even override the mileage where I say, yes, Matt, it was 211 miles, but it took me, 225. Something came up. And all I have to do, and I've taken this trip a million times, I-35 closed due to construction. That's pretty accurate, actually. So what it'll do is generate a little flag next to this particular trip for the supervisor to see with that reasoning, which we're about to look at. So I could continue with my day if I wanted. Just going to save what I've got so far. And I want to show you real quick the input grid, where a lot of agencies tend to come in here and use it, where it's just easy to come in at the end of the day or end of the week, like I said, and maybe I started at the office today. We went to the Williams. Add a new row, they went to the Thompsons after that. Franklin. Oops. No Franklin, hang on, what do we got here? Lincoln, Just got some generic names here. Matthews. And from there, maybe I went back home. Hit the shortcut, get mileage. And there I just booked my entire day in 15, 20 seconds. It's to the 10th of a mile. I can, override mileage if I need, put in visit types. But I hit save and post here, and I'm finished. Unless, of course, I needed to book another day, I could. So again, not only are you getting the more accurate way of recording the mileage, it's actually a heck of a lot easier than what they're doing today. And that's under the assumption they're getting in their vehicles, writing down odometers, doing the arithmetic, so on and so forth. Pretty tedious process. So what I'll do now, I'm going to log out. Again, you guys stop me as we go here if you have any questions. I'm going to log in as a supervisor. And all your hierarchy is done on the front end. So depending on who you are, there's those 9 trips in our queue waiting approval. So I've got my division, my department, whatever it's called that I'm over. I've got an overview of what went on here. I can break it down by division, department, job costing, project codes and grants and that kind of thing. Excuse me. You can even break it down by employee. And I do encourage you to look at it this way because you get each employee name. And here's all the trips that you and I just booked electronically. It's nice, it's neat, it's legible. It's got the miles, the amounts associated. One of the first things you'll see is a little home icon. I can actually click that and get the data and see that deduction that was made because of that home commute policy. And again, that rule can change. It can vary per employee. Same thing for on the way home. 18.5 miles to 13.5. And I'll go back to this real quick because I skipped over some of this. The home commute rule alone has shown a 13 to 14% savings in mileage of the roughly 25%. That's just 2 trips a day. So again, you know it's being utilized. And you'll see some flags in here. You can actually click these as well. One of these, I went over a threshold. Obviously, probably not commuting from Dallas to Austin and back. But one, we did an override where I've got I-35 closed due to construction. So I've got the reasoning. I've even had the ability, if need be, to grab single line item trips, put in a reasoning of why, and reject it back to the employee. Maybe you wanted more data. For the demo, we'll say it looks okay. All you have to do is just click this top box here. It's going to check in all these trips for this employee, and you're going to prove it all, including the overrides. And at this point, it's now ready for payment processing. So all of your supervisors will have done this, and you can have multiple levels of approval as well. Just set it for a single level for the demo. It's time to populate your payroll or accounting software, however you choose to pay them. You can do it the old-fashioned way with a batch report and continue to key it in, or within our reporting tab, we've got what's called custom reports, where we can build you an export to whatever system you use. And here's some examples, some of the ones we work with. It's not all of them, just some examples. But it's just a data file where you come in here, you hit your export, populate your fields, generate your file. Typically it's a CSV file. You can then turn around and upload it to payroll or accounting or wherever. So that alone saves you a ton of time on the back end. But not just having the monetary savings is actually having the data. Just like these guys were talking about earlier. I mean, the only thing on your P&L today without a receipt attached to it is mileage. It's just a number. And it turns out it's a number that you can manage. And you've got all the analytical reporting, audit reporting, daily route reports. It's all there to more, run your agency a little bit more efficiently. But there's a couple other little bells and whistles. Like I said, I've got a pretty hard stop come up here in a few minutes, but that's pretty much the process. We booked a couple of trips, a couple of different ways, sent it to our supervisor, they approved it, and we streamlined it up to your accounting or payroll software. But Bob, that's about as quick as I can get that all that out. Was there any questions from the group?
I'm going to go ahead and open up the line, and if anyone has any questions, feel free to ask them or chat them over to me if you'd like.
Okay, great. Bye.
And if there are no questions at this point, Bob, they've got my direct contact, so feel free to shoot me an email or give me a call directly.
Just before we go real quick, I wanted to thank everybody for joining us today, and if you do have any other questions, you can get hold of any of us. And if you are looking for some additional education, we can have some seminars coming up every month. The next 3 are engaging your employees with real-time data using reporting and dashboards. Then in February, we're talking about software selection journeys and how does one go about making a decision on a cloud solution. And then in March, we talk about what the cloud is and how to engage your IT director in that conversation. So you'll be seeing some emails for those coming up in the near future. Again, thanks for joining us, and everyone have a happy holiday season.
Thank you, Bob.
Thanks, Matt.